Assalamualaikum warahmatullahi wabarakatuh. My apologies again for a few issues that we are facing just now. Welcome everyone to our inaugural IR4U Shariah series, webinar series, in a collaboration with the Shariah Center of Excellence of Bursa Malaysia on the topic latest updates in Shariah Screening Methodology for securities listed in Bursa Malaysia. My name is Muhammad Sahil bin Nordin, and I'm from Shariah Department and Governance of Bursa Malaysia. We are excited to have with us two distinguished speakers from the Islamic Capital Market at the Securities Commission. The first speaker will be the Lukman Mahmud. He is currently an Assistant General Manager under the ICM Product Department. Lukman has vast regulatory and operational experience along with technical knowledge in various areas of the Islamic capital market. His expertise includes Islamic equities, Islamic fund management, Islamic stockbroking, and Shariah governance. The second speaker will be Encik Muhammad Hariz. He is currently a Deputy General Manager under Shariah Department. Encik Hariz possesses extensive regulatory and operational experience along with profound Shariah and technical knowledge in various areas relating to Islamic capital market. His expertise spans sukuk, Islamic structured products, Islamic fund management, Islamic REITs, Islamic stockbroking, Islamic crowdfunding, Islamic preference shares, Shariah governance, and Shariah advisory services. Today's webinar will be cover the Shariah screening methodology introduced by the Shariah Advisory Council of the SC. This methodology was established to classify securities listed on Bursa Malaysia as Shariah-compliant, providing a reliable reference for the Islamic investors, including unit trusts, funds, Takaful funds, and Islamic stockbroking services. By ensuring this investment adhere to the Shariah principles, this initiative significantly contributed to the growth and the development of the Islamic capital market in Malaysia. During this session, participants will learn about the approach used by the SC in determining the Shariah status of securities, and we will be updating you with the latest revision of the quantitative approach in the Shariah screening methodology issued by the SSC in July last year. This webinar will be divided into three segments. Encik Lukman will discuss on the review process and simulation, while Encik Hariz will present on the revision of the quantitative approach in Shariah screening methodology. And finally, we will have an open Q&A session, which you may include your question in the chat box at your screen. Let's get started, and please join us to welcome Encik Lukman for the first session.
Okay, thank you, Encik Sahil. Let me share the slide. Okay, can you see my slide?
Yes, we can see.
Okay, Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh, and very good morning. First, we would like to thank Bursa Malaysia for organizing this event. So I think this is a good session for us to share how we conduct the screening process to determine the Shariah status for listed company. So my session, I will share with you on the review process, how we start to process, to review each counter for the Shariah status, and I will share with you some case studies for simulation purposes. So basically, we will start to review the counter by planning for the announcement. So as you are aware, we are announced the updated list twice a year, in every last Friday of May and last Friday of November. So for example, in this upcoming May, we will release our list on 30th May 2025. So the assignment of the company will be based on the financial year end. So each listed company, they will they have to release their annual report or audited uh, annual audited account triple A's within 4 months. So that one based on the Bursa listing requirement. So for May announcement, we will cover for FYE that release based on FYE June until November. So for example, FYE June, they will release in July, August, September, and October. So only October we will get the annual report, and then we will start review. So for today, for example, right? So today is 28 February. So it will cover for FYE October, November, December, January, February. So today we will see the release of annual report based on FYE October. So once the audited financial statement or annual report are made available on Bursa website, so we will assign to the officer internally for the for the reviewing process. So the officer will start extract the relevant information, whatever information we are looking into, like revenue, looking into the total asset, and then contribution from Shariah non-compliant activities like interest income, and then we look into the total cash and total debt. So during the review process, if the information is not made available in the annual report, so then we will send a query to the company asking for the particular breakdown. For example, if the company involved in selling alcohol or tobacco, which is not been disclosed in the annual report, so we will request for further breakdown. Same goes to total cash or total debt. We notice that some company disclose the segregate the contribution or the cash placement in Islamic bank and conventional bank in the other report. Also, some company they disclose the breakdown of borrowing, either financing from Islamic facilities or conventional facilities. But most of the company they won't disclose. So we will, if the based on our calculation, is the contribution breach the threshold. For example, like cash ratio they are breach 33%, then we only send the query for further breakdown. And then once completed, we will get the quantitative result, whether Shariah compliant or Shariah non-compliant. Then the result we will present to our SSC, Shariah Advisory Council, on monthly meeting. So uh, during the presenting process, the SSC may ask for further breakdown, the detail of the contribution, and they also may consider the image of the companies. And then once presented to SSC, then we compile the list. And for example, like this coming May, for this May announcement, we will compile the list that we presented to SSC from December meeting, January, February, March, and April, and including May. And then by 30th May 2025, we will release all the status of the companies. In the case that company reclassified to Shariah non-compliant, so normally we will issue a letter to notify them. They will change status for their companies, and then we give them room to appeal. Let's say they say that they have a justification or they have submit wrong information or whatever reason. So um, we will assess the justification and table to SSC for final endorsement. So there are certain cases that we accept the justification and the company maintain Shariah compliant. And also there are cases that we reject the justification and the company will become Shariah non-compliant. So that's the overall process, how we conduct the screening. Okay, we're talking about a reverse computation in 2025, where we introduce the total income approach instead of group revenue. And also we remove the PBT calculation. So basically earlier we are using two level calculation, first at group revenue level and second one at group PBT level, I mean contribution for Shariah non-compliant income. So in this case, we expand the scope of the denominator. So for example, like group revenue, now we include the other income from the company itself. So previously we only issue group revenue. So revenue from SNC, National Non-Compliant Activity, will be divided over group revenue. And then PBT from Shariah Non-Compliant Activity will be divided over group PBT. So whichever is higher. So whichever is higher, breach 5% benchmark, we consider Shariah Non-Compliant. Single select SAP as a share of profit from associate or joint venture companies, we will divide it over with group PBT. So under the revised methodology, now the denominator is become bigger. We will look into the total income. So meaning to say group revenue plus other income plus share of profit from associate company or joint venture to make up the total income of the group. And PBT calculation no longer applicable. And then any share of profit from SNC activity will be against total income of the group. Okay, this is the list of the business activities that we make available in our website. You can go to our website to look into the details or the list of the business activities. So for 5% business activity benchmark, we're talking about conventional banking and lending, conventional insurance, gambling, liquor and liquor related activities, pork and pork related activities. Okay, the related activities here, we refer to any activities that related to the product. For example, if you are involved in labeling the alcohol, packaging, marketing, transporting, warehousing, anything to do with this activity, we will consider related activities. We will take into consideration. And then we're talking about non-halal food and beverages, including F&B without halal certification. Now, if the company involved in food and beverages, they must have halal certification recognized by JAKIM, or they imported the product from overseas, and then they must ensure that that product must be certified by a certification body also recognized by JAKIM. So if you don't have the halal certificate, we will treat as Shariah non-compliant activities. Same like tobacco, cigarette, vapes, and then interest income from conventional accounts and instrument, dividends from Shariah non-compliant investment, Shariah non-compliant entertainment, and other activities. For 20% benchmark, we have share trading, stockbroking business, cinema, rental received from Shariah non-compliant activities, and other activities. Then also we have a financial ratio, the total cash over total asset, and debt, total debt over the total asset.
Gentlemen, sorry, apologies. Can you just click hide on the Zooms? Yes, okay, thank you.
Okay, we go to the simulation. We have few case study here to show the implication. For in case this company, they have the principal activity of this company is doing construction, and they have one subsidiary involved in selling tobacco. So we look at the group information. They have revenue 10 million, PBT 5 million, other income 500,000. Shariah non-compliant activity, they have revenue level from tobacco 900 million and PBT for the tobacco 400,000. So this is the result. We see the comparison prior to revision and post revision. So basically, looking at the prior revision, the contribution from tobacco will be calculated against the group revenue. So 900,000 over 10 million, we will get 9%. And then we also calculate at PBT level, 500,000 over 5 million for group PBT, we get 8%. So we will calculate both and we see whichever is higher. So whenever breach the 5% benchmark, we will consider Shariah non-compliant. So in this case, for prior to the revision, the contribution both breach 5% and will will consider as Shariah non-compliant. And then we look at, in comparison, the post-revision, still the same, tobacco revenue 900,000, but the denominator now is become bigger. We add group revenue plus group other income. So we see they have other income here, 500,000. So 900 million over 10.5 million. So the result is 8.57%. So it's slightly lower than earlier, 9% prior to revision, 9%. Now it's the drop to 8.7%. But because 8.57 still above 5%, is still considered as Shariah non-compliant. And non-calculation at PVT level. That case study number 1. And then this is for case study number 2. This company involved in retail business. They have liquor as well as gambling business. So we look at the group information, turnover for the company, 10 million, PBT 5 million, and they have other income, 3 million. Contribution from Shariah non-compliant activities for liquor, turnover 400,000, PBT for liquor 120,000, and then for turnover for gambling business 200,000, and PBT for gambling 100,000. So the result is, we see the implication for prior and post revision. So for prior revision, the contribution from SNC activities for 100 plus 200 mil to 100,000 over 10 million, the group revenue, the result is 6%, which is above the benchmark of 5%. And then for PBT level, 0.12 plus 0.1 million over 5 million for group PBT, slightly below for 4.4%. So for PBT is lower, so we will take whichever is higher. So this company stays Shariah non-compliant due to breach at group PBT, breach at group revenue level. Okay, now we compare to post revision. We see that the income, the contribution stay the same, 0.4 plus 0.2, but the group total income is not bigger. The group revenue, 10 million plus the group other income. You see, we have the group other income here. So now the contribution is 4.6%, 4.6% below the 5% threshold, and no calculation at PBT level. So in this case, the company will classify as Shariah compliant because below the benchmark. And then we go to the final case study. The company is involved as a car dealer, and one of the associate involved in insurance business. So we look at the group information, revenue 2 million, PBT 500,000, interest income 100,000, and then share of profit from the insurance 20,000. So let's look at the result prior and post revision. So contribution from interest income 100,000 over 2 million for group revenue, we get a 5%, and then for contribution from share profit insurance 20,000 over the group PBT 500,000, we got a 4%. Since the interest income, because the methodology is must be less than 5%. So either 5% and above, we consider Shariah non-compliant. So post revision, we take into consideration the interest income 100,000 plus the insurance 20,000, and then divided over the group total income 2 million plus 120,000. Then the result is 5.7%, slightly higher than previous calculation. So against no calculation at PBT level. So the company still maintained as Shariah non-compliant. So basically, just to summarize, the percentage of the contribution, the percentage from Shariah non-compliant activity mainly depend on the group total income. So you can see the percentage could be higher, could be lower. And again, there's no more calculation at PVT level. I think that's all from me for my part. I pass back to Encik Sahil.
Okay, thank you, Encik Lukman, for your comprehensive and enlightening presentation on the review process on the simulation. So, for us to understand what is the derivation of the Shariah Screening Methodology and also what is the Shariah justification behind it, I would like to invite Encik Hariz to deliver the second session. Thank you. I would like to invite Encik Hariz, yes.
Thank you very much, Sahil. First of all, I would just like to thank the Bursa Malaysia for holding this Shariah series webinar, and I would just also to thank my colleague Lukman for presenting the first part of our session today with regard to the update on the screening methodology of listed securities which have been undertaken by the SC. Before I proceed further with my part, let me just basically share the material that we'll be using for today. Can you hear clearly now the slide?
Yes, Encik Hariz, we can see.
Okay, thank you very much. So just to continue the part which has been presented by my colleague earlier, before I just highlight in terms of the revision of the screening methodology, or rather actually the denominator or the quantitative aspects that have been recently introduced by the SEC, just also to share the history of the Shariah-compliant securities that have been undertaken in Malaysia. In fact, actually, during the early days after the screening, it was originally first prepared the list of Shariah-compliant securities by Bank Islam Malaysia Berhad back then in June 1995. And then afterwards, the whole arrangement in actually coming up with this list is actually to facilitate the demand, particularly on institutional investors, in order to invest in Shariah-compliant securities. So then afterwards, after the setting up of the SC, and then also during the initial stage precursor to the establishment of the SAC, the Kumpulan Pendidikan Instrumen Islam, which was known back then, was actually tasked by the SC to first actually discuss on the Shariah-compliant list of the Shariah-compliant securities. And then afterwards, this effort was continued by the SAC upon its formal establishment in 1996. So from then onwards, in July 1996, when actually it was actually list first introduced by the SSC, which continue. Sorry, any?
Sorry, Encik Hariz, can you share the full screening? I think the slide is not moving.
Okay, it's not full screen now, is it?
Yep.
Let me see, because at my end it's already full.
Okay. The slide is moving. Maybe,
Okay.
Okay, can you share in full screen?
It is not in full screen, is it? Because at my end it's already full. Don't know.
Or we can share the slide on behalf
Okay,
of you.
sure. I'll just stop sharing, and you can just share the slide on the end. Yeah.
Let's wait for one. Okay. Full screen.
Okay.
Okay.
So basically, I mean, for the first slide that I just shared earlier, that historically the way that we have actually gone through the process of issuing the list of Shariah-compliant securities from BNB at the industry level, and after the setting up of the SC, and then which was first actually initiated afterwards by the Kumpulan Pendidikan Instrumen Islam at the SC level, and then after the establishment of the SAC in 1986, the first official list introduced by the SAC was issued in 1996. So this is actually the history and how the list of Shariah-compliant securities was introduced towards the industry, facilitating the institutional investors, retail investors, particularly who like to invest in Shariah-compliant securities. And then moving to the next slide, what I just like to highlight here is actually this is the milestone that we have gone through within the industry on how the Shariah-compliant list has actually been done, where starting in 1995, during the start of the list, it was actually based on a 4 activity-based Shariah screening benchmark, which I will share slightly more later. And then in 1997, this is actually the first official list which was announced by the SC, based on the screening benchmark that I highlighted earlier, based on the 4 activity-based benchmark. And then 1998, this is where the list was announced twice yearly, and it is further streamlined to April and October in the year 2000. And then afterwards in 2004, the SC disclosed the benchmark which was applied in screening the Shariah-compliant securities. And then at the same year, in 2004 also, for issuers who like to have the status of their securities to be considered Shariah compliant, they can voluntarily apply to the SC to screen, and then afterwards to issue the status with regard to their securities. And in 2007, it was announced under the change of the announcement date from April and October to May and November. And this approach of releasing and then also announcing the list of Shariah-compliant securities is continued until now. And then during the same year in 2007, also Bursa Malaysia and FTSE launched their 2 Shariah indices. And in 2012, it was further streamlined in terms of the business activity benchmarks, from 4 benchmarks into 2 benchmarks, and then also the introduction of the financial ratios as part of the component in determining the Shariah status of the listed securities. And then just recently in 2024, this is where we have introduced the mandatory screening of the IPO securities, of the IPO companies, because the difference in terms of the approach previously, as what I highlighted earlier, in 2004, it is a voluntary approach on part of the companies when they would like to have the status of their companies. But in 2024, it was decided that for all IPO companies, SC will screen them and provide the status. This is actually meant to facilitate further, so that any particular investors, be it institutional or retail investors, would know much earlier when they invest in IPO companies in terms of their Shariah status. So this is the latest approach undertaken by the SC, and then also on the same year, last year also, it was introduced under the revision of the quantitative approach in screening the listed securities, where we have introduced the total income as the new and the revised denominator, replacing the group revenue and also group PBT as a denominator. And as I highlighted earlier, with regards to the business activities benchmark, if you can just basically move to the next slide. Previously, it was 4 benchmarks which was used in screening the companies, with 5, 10, 20, and 25, where in each and every benchmark itself, they have a specific components. Back then, the reason why it introduced in the 4 benchmark itself is more to have a specific aspect of each and every benchmark within each and every category is considered in terms of the suitableness of what particular benchmark which is more applicable from 5, 10, and 2025, based on that arrangement back then. And then afterwards, like what highlighted earlier, when we revised the business activity benchmark, it was further consolidated into 2 benchmark, where some of the benchmark previously under the 10% benchmark was further consolidated into the 5% benchmark, and the one which was under the 25% benchmark was basically further consolidated into 20% benchmark. So this 2 benchmark is currently being used in determining the Shariah compliant securities of the companies, particularly listed securities. So it provide a clear aspects, and or rather also the business activity benchmark, which would fall under which particular benchmark, either it's 5% or 20% itself. And then actually, I would just also like to share, the rationale previously when the SSC used revenue and also profit before tax as the rationale in calculating and then also in coming up as the denominator for the purpose of the Shariah-compliant determine the Shariah-compliant securities. Basically, more from looking from the aspects of, on one hand, in terms of the revenue, from the SEC's perspective back then, because it's considered as the non-permissible income. So the element of non-permissible income will have to be taken into account as whatever amount gained by the companies. So the calculation of any non-permissible or the haram income should be taken into account to see on what's actually the amount that the company actually generate, and then that would actually be considered as one of the denominator in determining the Shariah non-compliant, the Shariah-compliant status of the companies. Meanwhile, in respect of the profit before tax, the rationale into looking into that is because apart from actually looking at the percentage of the non-permissible income, the profit generated of that non-permissible income also should also be taken into account in calculating whether a particular company is considered as Shariah compliant or not. So those were the basis which was used back then by the council in actually coming out and determining the denominator for calculating the Shariah compliant status of securities itself. So then moving forward afterwards, this is actually the dual approach of screening, as I think have been further highlighted by my colleague Lukman earlier. But what I just like to stress is actually when we would like to screen any particular companies, this is actually the approach that be taken by the SEC, where on one hand, the quantitative approach that is being looked at is actually to assess on whether they comply with the business activities benchmark, the 5 and 20% benchmark, and then in calculating this business activities benchmark, this is where the group revenue and group before profit before PBT would need to be taken into account to see and whether it breach the benchmark of 5% and also the 20% itself. And then at the same time, also like what highlighted earlier, the financial ratios also is used in determining whether it actually fall in line with the cash ratios and also debt ratios. This is the another layer of screening that was introduced back then based on the revised screening methodology adopted by the council. So this is quantitative aspects looking through in terms of this business activities and also the financial ratios aspects. Meanwhile, the SEC also look into the qualitative aspects which cover the public perception or also image from the Islamic perspective. What we mean the public perception is actually on top of the business activities benchmark or the numbers or the quantitative aspects. There are also instances where the SEC look through, notwithstanding the fact that there may be alignment or actually in line with the benchmark itself. If there happen to be any could actually provide or connote a negative perception from Shariah perspective or from Islamic perspective, that will also be taken into account in assessing whether a particular companies can be considered Shariah compliant or not. So this dual approach of screening is currently and then continuously have been adopted by the council in determining the Shariah status of listed securities itself. And then moving forward into the next slide. This is where the move that have been actually considered by the council in determining on what would be an approach that we should also look into in order to consider and quantify also the denominator, because from time to time it has been for quite some time already, closely to 30 years. We have been using the group revenue and profit before tax. So the assessment have been taken from time to time by the council via the secretary also to look into, is there any other avenue or other way also we have for us to look into in calculating the appropriate or basically rather a more accurate denominator. So hence, based on the research undertaken and also taking into account also on various practices, we look through into the total income, and then we see that it would actually better reflect an accurate calculation of the revenue of the companies, which does not just cover from the principal activities, but rather the whole income generated by the companies, taking into account also other income and also share of profit. Because previously, before this, when we use revenue and also group profit before tax, the aspects of other income derived from either associate companies would not actually be part of the denominator in calculating the Shariah compliant income derived from the companies. So by taking into account the total income itself, it would cover the whole revenue generated by the company, covering also the aspect of the revenue in itself, other income and share of profit. So on this basis, actually, then the SEC have deliberated, and also afterwards in the next slide, I would just like to share where the SEC have come up with the resolution, the new resolution with regards to the revision of the quantitative approach in the Shariah screening methodology. And then on this basis, actually, what I like to highlight here is that after assessing on the benchmarks, so the 5 and 20% benchmark, the SSC have deliberated on the aspect on introduction of the single computation approach itself to look through in terms of whether the suitability of the total income to be used as the revised denominator, and also the deliberation on the removal of profit before tax as denominator. So based on that assessment, it was resolved in the next slides. I would just like to highlight and also share today, where the SSC has resolved that to introduce a single denominator which covers the aspect of the revenue, the income, and also share of profit as the new revised denominator in calculating the Shariah compliant securities itself. And then based on that, also based on the new revised denominator, the SEC also resolved to remove PBT from the denominator itself. And the Shariah justification, which was actually used by the council in arriving at decision, is more looking from a perspective of al-adlu or al-ihsan, or the justice and social fairness. This is more from looking from a perspective where by adopting the total income itself, it will reflect a more holistic approach in looking at the denominator, where the income of the company does not just look through from the perspective of the principal activities, which was based back then by looking into the revenue, and then also not just looking from the context of for the companies which would gain tax, which would actually have a profit actually, but if in a case of any loss, then it may actually provide the disparity in terms of the calculation of the Shariah compliant status of the company. So by adopting the single denominator, it would actually reflect a much fairer approach in calculating the whole income generated by the companies. And then this is actually also in line with the Maqasid Shariah guidance issued by the SC, particularly principle number 6, aspiration 2, where it reflects the practice of justice and benevolence and the fairness on part of the determination of the denominator as the appropriate way, on a much accurate way on actually assessing and also calculating the Shariah compliant status of listed securities. So throughout the flow of what I just shared earlier today, based on also the evolution and also the development of the screening methodology that have been adopted by the council, leading up until now with the new quantitative approach in screening the Shariah compliant status of securities, it reflects the evolution aspects, and also various considerations have been taken by the council in arriving at the new enhanced approach towards a new denominator in calculating Shariah compliant status of companies. So I believe based on the simulation that have already been presented by my colleague Cik Lukman, it would actually have a clear, basically demonstrated the way and how this new denominator being applied, in the hope that basically from Shariah perspective, also with the proper justification that I have highlighted earlier, it will provide a much clearer perspective and also understanding on part of the parties, particularly the public listed companies, in the way on understanding on how actually the status of the companies have been arrived at, either Shariah compliant or Shariah non-compliant status by the SEC. So I think I'll just stop there with the sharing in that respect. So inshallah, if there happen to be any question and queries, we'll just try to address accordingly. Thank you very much. Then I'll just leave to Ustaz Sahil to continue the session. Thank you.
Thank you, Hariz, for your insightful and the revision of the Shariah Screening Methodology and the Shariah justification behind it. I think we received a few questions here, and the floor is open, still open for any Q&A session. So if you would like to have any question, you can just type in the chat box. Okay, Cik Hariz and Cik Lukman, I think I can pick a few questions here. Understand that for the SSC of SC, Shariah status review will be done semi-annual for Malaysia stock. Will it be the same for the global stock, and how frequently do they do their Shariah screening?
Okay, let me answer that question. Yes, for SC, SSC, SC, we will review the status. Okay, do we update the status twice a year, May and November, based on the FYE account released by the company. But every company only will be screened once a year. Because to cater of the different FYE, because we have 12 months of FYE, so that's why we spread the review based on the release of the FYE. But against one company only we screen once a year. In the case for the global stock, we're not sure. We're not sure in terms of how the detail they will do doing the screening, but we can answer on behalf of how SC doing the screening. Excuse me.
Yeah. Thank you, Cik Lukman. The second question, appreciate you can enlighten Ishan justification on each benchmark.
Okay. Generally, when it was introduced back then, for each and every benchmark, uh, the main consideration that have been taken by the SCC was actually to look into whether the element of the non-compliance or the haram element is actually the haram lidatihi. So that will be the core element of the non-compliant aspect, which will determine on which particular benchmark that from SSC considered is tolerable and to be considered in which particular benchmark, whether it's 5 and 10%. Whereas the lesser degree of the non-compliance or the haram aspects, haram li ghairihi, for instance, in the context of the syarah rent, the non-syarah compliant rental itself. So that's actually also the consideration in determining that it will not fall within the so-called core element. So the determination of 5 and 20 eventually afterwards when we consolidate it into the benchmark. So those are the main consideration which were taken into account by the council, whether it is actually haram lidatihi, which is actually is purely haram, which would not be which we could not actually tolerate. So hence the tightness of the benchmark of 5% was actually adopted for that. So other than that, then it will fall now under the 20% benchmark. So generally, that's actually the basis taken by the council in determining which particular benchmark will be applicable for any of the non-compliant aspect or business activities of the companies.
Okay, thank you, Hariz. I think also on the regarding to the benchmark, what are the non-Shariah compliant activities under 20% benchmark? I think has been explained by Hariz. How is the hotel treated?
Yeah. Currently, hotel is not a part of the benchmark anymore. Notwithstanding the fact previously it was part. So now the DSF look into the context of the hotel, where the hotel itself is looked into as an accommodation, but any other activities which are non-compliant, for instance, that have been taken by the companies who own a hotel, for instance, if it involves alcohol or liquor related or tobacco, then it will already actually be applied in accordance for that particular activities itself. For instance, if the company have, income generated from liquor related, then it will fall within the 5%. And any income generated, for instance, from interest, it will also fall within the 5% under the specific business activity benchmark have been taken. So, in as far as the hotel is concerned, currently it is not within any specific benchmark anymore, though previously it was under the 20% benchmark.
Okay, thank you. Why epic copy is not classified as the Shariah compliant, even though it is provide halal food?
Okay, if I can answer in general, so how we screen a company that involved in F&B business, right? So for F&B business, whenever the company release the account, for example, like they report in the account contribution from F&B 10 million, for example. And then the 10 million coming from 10 outlets, right? 10 premise. So the company have to show that all the 10 outlets has halal certification by JAKIM. So if you are saying that out of 10 outlets, only 8 outlets have halal certificate, then contribution from the two outlets without halal certificate, we will consider as Shariah non-compliant. So that's why in our methodology, we put that any um, business involved of F&B, the company must obtain the Shariah, the halal certification by JAKIM. Yeah.
Okay. I think also a question to Cik Lukman, let's say tobacco contributes 4% and cinnamon contributes 70%, will it be counted as 15 or plus 17 or pass?
Okay, because there are two benchmark, 5% and 20%. For tobacco, it will be below 5%, and then for cinema also will be below 20%. So it will pass. It will pass because still not reach the respective ratio of 5% and 20%. It won't be counted as together. It will be assessed separately under the respective benchmark.
Okay. Do you have any idea also, Cik Lukman, in whether the method is similar to the methodology used by the IR4U on the impermissible income?
Okay, if I can recall the methodologies by your fee, we don't prescribe the list what the activities are impermissible activity under Shariah non-compliant. In our case, we list down. We just shown just now conventional borrowing, conventional financing, insurance, alcohol, and so on. But for IOFI, they just put in general impermissible income. They don't define or they don't provide the list what is the permissible activities. But I suppose the Shariah non-compliant activity is made known to everybody. We have the similar things which is haram, which is halal. So I suppose it will be the same.
Okay. With the weapon is considered non-shariah.
Because you know that we have 1,000 listed company listed and they deal with sort of various business and activities. So the one that we mentioned, we provide the list is the one that common to everybody. But there are cases when the company involved in selling uh, religious product and activities. For example, you are selling praying oil, right? So praying oil for certain religion, for us is considered non-permissible. But not many companies that are doing this activity. So that's why we put another statement: activities that's considered non-Sharia activities. Yes. For defense, so far we haven't have any company that involved in selling weapon. So that's why in our case, defense is not part of our list.
Okay. Maybe for Cik Hariz, what are the basis of choosing 5, 20, and 30%? And also may share why cinema listed as part of non-permissible activities. I think this will be the last because we have come to the end of the session. Maybe Cik Hariz, you want to take a few questions?
Thank you very much, Sahil. So in terms of the basis of choosing 5, 20, and 30%, in terms of the numbers for the 3%, the kias that have been used by the SAC is looking at the inheritance or the mirath numbers, thuluth or thuluth kathir. So that's actually one of the bases which was considered by the SAC in choosing 33% as the percentage with regards to financial ratios. Maybe one of 5 and 20%. Actually, this is also an ijtihad approach, where in respect of 5, what would be the so-called the immaterial or the negligible numbers which would be considered as a tolerable as also on other care situation. The SSC has arrived at 5-20% is actually will be the appropriate way on how to actually be considered as the appropriate percentage. I mean, of course, the SSC also look into on the other index providers and also other parties in assessing on the appropriate percentage back then. But this was actually the one the reason when how the SSC arrived at the 5, 20, and also 33% itself as the specific consideration for the percentage of the business activities benchmark. And on the cinema, actually, it was there as part of the list within the 20% benchmark. But it's more on that looking from a perspective, notwithstanding the fact it is actually for activities of watching movies and whatnot, but the other consideration which entails in considering that cinema is actually also part of the 20% benchmark, other consideration which actually connote the non-compliant aspects in terms of the whole experience, either in the context of the movie set itself, and also the involvement of the what we call it this mix aspects and other aspects which could also contribute towards the non-Shariah compliant aspects. So this is like what I said earlier, the aspects of not specifically purely actually prohibited, but rather other aspect that from the SSC's assessment could contribute towards the non-compliant aspects of that as an activities. So that's what I can just share a bit in terms of the cinema itself, which is still now under the 20% benchmark.
And also maybe last for Cik Lukman, because we have come to the end of the session. Maybe last for the rating more, how does SC does audit to ensure the details provided are accurate with regards to cinema and halal F&B component? This one conclusion one.
Okay, for the contribution provided by the companies, so actually we rely on the wherever submission by the company. Of course, the company have to declare and be signed by the authority uh, by the authoritative person of the company to ensure that whatever figure provided to us are accurate. So we just rely on their representation, and that's why we request all the information must be based on the audited financial statement. So I suppose whatever figure they provide to us has been audited and been declared by the companies.
Okay. Thank you so much, Encik Lukman, Encik Hariz. We extend our gratitude to the to all participants. Thank you for joining us today. We have a good feedbacks based on the question that I have given. Maybe we in the future we may have a new engagement or other engagement between the Securities Commission and also the PLCs. And stay tuned for our second Shariah webinar in Q2, and we will update you soon on the details. Thank you so much and have a blessed Friday. Jumaat Mubarak. Assalamualaikum warahmatullahi wabarakatuh.
Waalaikumsalam warahmatullahi.
Terima kasih, Cik Hariz.
Thank you, Cik Hariz.
Thank you.
Thank you,
Sahil.
Sahil.
Thank you.
Thank you.
Yeah.
Seratus berapa?